Welcome to Plus TV. Today we have Lisa O'Connor, Head of Global Macro Portfolio Management for State Street Global Advisors. Lisa, thank you for joining us today.
Oh, thank you. Thank you for having me.
It's great to have you. So can you give us an introduction firstly and tell us about your role at State Street Global Advisors and what you do on a day-to-day basis?
So I head up the Global Macro Portfolio Management area. So what we do, we came and joined State Street about 1.5 years ago. So on a day-to-day basis, help manage the portfolio across equities, rates, commodities, currencies, credit. There's a lot of different opportunities that we can take advantage of.
What are investors missing out there? What are some of the surprises they're going to see in the markets, or something they should certainly be aware of that they're not taking note of yet?
I think on the economic trend side, it's been a slow-moving trend, but it's been incredibly important, and that's the demographic shift. And you've been seeing it in Japan for the past 15 years, seeing it in Europe, and this is so important because it's like an aggregate demand shock. So what happens is that as people age, they tend to consume a lot less and they save a lot more. So if you look at that on an aggregate level, it really slows down economic growth. So that's why the economic growth has been so low in Europe, in Japan, to a certain extent in the US, and that's why inflation has been so incredibly low, as economies are adjusting to just a lower level of output that's needed. Essentially, you've got some oversupply that's needing to be adjusted to. So, you know, it makes for an interesting market environment because not all economies are at that same path. So in a way, you can just play these diverging central bank policies because you still have so much easing out of the BOJ, out of the ECB because of the magnitude of the demographic shift. So you can take advantage of some of these trends in the currency markets. It's been a great place to be.
Can you give a few examples of how you take advantage of the dislocations between the central bank policies?
Well, I think one way this is the currency, the G10 currency, because what we're seeing, and you're seeing this not only in the developed markets, but also to a certain extent in the emerging markets. And so this is the fact that there's kind of a competitive devaluation that's been going on. So because growth has been slow and it's been slow globally, what different central banks are doing is trying to get as low as possible so they can weaken their currencies to a certain extent, because as you weaken your currency, you can tap into a higher export market. So that's been a really important trend. So you've been seeing it, you know, in obviously the euro, the yen, but you're also seeing it in East Asia. You've been seeing a lot more competitive devaluation that's been going on. So because they're highly geared, a lot of these economies are highly geared to the export markets. So that's been a really important trend that we've been playing. I mean, you're seeing, in a way, a currency war going on in Asia and this was really accelerated with the amount, the magnitude of the central bank easing out of the BOJ. So it is changing the dynamic a bit within Asia.
So I'm curious, from your perspective, global macro specialist, what are you hearing from investors, particularly institutional investors? Are they looking at the strategy, and what's their feedback on what you're doing?
Well, I think it's been really great. People have been very, very responsive. I think what people are looking for global macro now is because you are coming to the tail end of a highly accommodative cycle, particularly in the U.S. So in that situation, people are looking, valuations are looking a little more stretched. People want to be a little more nimble. You know, it's been a great time for the past 4 years to be 60-40. But as you have a change in the pace of normalization of real rates, and we're starting gradually upon that path, market pricing you need to be a bit more nimble, because being in a kind of a static allocation across equities and bonds may not pay off, won't pay off as handsomely in that kind of environment.
And are there any misconceptions about global macro that you want to speak about?
Well, it's such a wide-ranging space, so it can be a lot of different types. There's the discretionary, there's systematic. You know, the way that we're looking at the world is that a discretionary element makes tremendous amount of sense because it's such a policy-driven market. It's hard to quantitatively adjust for that. So this is something where you have to be able to be responsive in order to find where to find the valuation opportunities.
So tell me about your idea generation process and how you and your team look for opportunities.
So in terms of idea generation, I would say there's two primary catalysts. So the first would be, a catalyst-driven type of trade. So this would be, for example, if you see a big change in central bank policy. So if you're getting more accommodative, or if it's becoming, much less accommodative, it'll have an impact on a variety of asset prices. So it'll impact your equity markets, your currency markets, your rate markets. So in the event that we see a big change in central bank policy coming, we'll set up trades alongside to take advantage of those opportunities. On the other side would be more of like a valuation opportunity, and it's more bottoms up. So if the first one is top down and seeing how things will impact, the second one really is looking for valuations opportunities within an asset classes or across asset classes, and setting up a trade to take advantage of those valuation opportunities. So either both sides will lead to idea generation for us. It's going to adjust relative to where the most opportunities are, the greatest risk-adjusted opportunities. The derivatives we'll look at whether we want to do in physicals or derivatives. Derivatives sometimes have really great liquidity. It really depends on the market. You have to be mindful of that. But in terms of the allocation across kind of the different asset classes, we will be looking for kind of what the risk-adjusted expected returns are, and then allocating accordingly. So what we don't want to do is be stuck in an area. Let's say, if you're looking at a lot of the credit markets now, there's been a lot of compression. If you were looking within an individual credit market, you'd be taking a lot more leverage just because the spreads are much tighter. So we don't want to do that so much. If there's not a lot of opportunity, rather than lever it up and just try to get the last few cents, we'll look for other opportunities in other spaces where the pickings are more attractive and where you can find something.
And how did you build your team to accommodate your philosophy, your investment philosophy, and your idea generation process?
Well, it was important to us, like if you look at the market environment, we thought policy-driven was a big theme and would continue to drive markets. And then this is because of the broader trends that we talked about, kind of this low growth, low inflation, unleashing all the central bank activity. So we needed to have an expert in terms of central bank policy. So our head of research came out of the Swiss National Bank and has been just a great addition to the team. We also want to be able to tap into emerging markets, and that was really important because there has been so much growth in a lot of these markets so they're deeper than they were like 10, 15 years ago. So there are some opportunities you can take advantage of. We have another team member who had come out of the EM Equity Group. So when we were looking across, we wanted to be able to take advantage of opportunities across a variety of asset classes, so you can go broad but also deep as well. So that's how we built it, kind of looking for both developed and EM market experience, policy driven, and some valuation driven types of experience.